Everyone thinks Japan's economy collapsed because of a bubble. That's cute, because this disaster wasn't just a mistake. It was a slow-motion financial trap, and once it snapped, $20 trillion vanished like it never existed. And yes, it gets worse. Imagine waking up in a country where yesterday everyone felt rich, and today their wealth was basically imaginary. Stock prices were melting, property values were free-falling, and banks were staring at their balance sheets like, this math doesn't feel right. Even economists were panicking, which is impressive because here's the part they never mention. 5. Fact number 2, the dirty secret. In the 1980s, Japan was unstoppable. Japanese companies were buying everything. Buildings in New York, Hollywood studios, global brands. So the government did something dangerous. They flooded the economy with cheap money. Interest rates were pushed insanely low. Banks started lending like money had no consequence. People borrowed to buy stocks, then borrowed more to buy property, then used rising prices as proof it was safe. It was a perfect feedback loop. Not investing, speculating. It's like watching someone juggle knives while saying, "Relax, I've done this once before." But the craziest part is still coming. Then came denial. The government saw prices exploding and thought, maybe we should slow this down. So they raised interest rates, just a little. That's all it took. Borrowing suddenly became expensive. Stock prices froze, then cracked. Real estate stopped rising, then collapsed. And because everything was built on debt, when prices fell, the entire system snapped. Greed turned into panic. Confidence turned into silence. Some experts still argue this wasn't a crisis. They say it was a robbery, wearing a crisis costume. This was the moment. Markets stopped making sense. Banks realized their assets were basically illusions. Companies were alive, but technically bankrupt. This is when Japan lost $20 trillion in paper wealth. If money could scream, this is where it would have completely lost its voice. But here's the detail everyone ignores. The crash didn't end the damage. It froze the future. Companies stopped investing. Workers stopped taking risks. Banks stopped lending, even to good businesses. Japan entered what we now call the lost decades. Economic growth flatlined. Wages barely moved, and people started saving out of fear, not confidence. And here's the uncomfortable truth. Your cost of living today, your job insecurity, your fear of crashes, yeah, those lessons were written here. Japan's collapse teaches one brutal lesson. Finance isn't numbers. It's human behavior dressed in a suit. Cheap money creates confidence. Confidence turns into greed. And greed always ignores the exit. Because every bubble feels safe until it isn't. And if you think this story was insane, wait until you hear